What's up everyone, it's Kadi with Money Investing. Welcome on board. Ranjit, every day you are the first person to join our live stream. I love it. And then again, everybody welcome on board. Happy to have you. We do have the markets pushing higher here pre-market. So we've got the NASDAQ ETF QQQ up a little bit over 85 basis points. We've got the SPY up over 60 basis points and the Dow Jones pushing higher a little bit over 0.5%. But again, I would not trust these rallies, would not trust these green days, especially in the pre-market, because where we close matters most for the market. So there's a lot to cover and there's a lot to go over here. So once again, thank you so much for joining. Yes, the PPI data came out and we'll go over that here in just a minute. And Ranjit has covered calls time, baby at peaks. So good morning, everyone. Really appreciate you guys joining here. So stock futures rises, oil prices continue to slide. Inflation report comes in lighter than expected. And oil prices continue to fall. For a second day, U.S. crude futures slid about 8% to $94.55 after topping $130 about a week ago. Meanwhile, international Brent benchmark was down about 7% to $98.46 per barrel. So that's good news. That is good for the inflation picture. That's good for the global inflation as well. You know, obviously with oil prices coming back down, energy prices coming down, gas prices, fuel, commodities, all that has that reactive sort of measure where we see gas prices pulling back down as well. So that's good as oil prices kind of take a breather here. And the drop in oil prices put pressure on energy stocks. Occidental fell more than 5%, while Schlumberger and Halliburton each lost more than 4%, and the energy fund was down over 3.4%. So remember we talked about how the energy trade will eventually run its course. I'm not sure if this is it. It could certainly go even higher, and this could just be like a little bit of a breather. It could be a small pullback before we see a rally back higher. But the point was that was not sustainable, right? We will eventually see pullbacks and corrections for energy as well. And as oil prices come down, that's going to cool off some of that energy trade here. So airline stocks got a booster pre-market after several companies raised their revenue outlooks. That's good because oil prices, gasoline, fuel, all that is their biggest expense, right? For airlines especially. And Delta rose about 6%. United and Southwest were up a little bit over 4% each. And a surge in energy prices in February led to wholesale good prices to their biggest one-month jump on record. So the PPI numbers came out. That's your producer price index that rose 80 basis points in February from the previous month. While that was slightly lower than the 90 basis points expectations, it was still up over 10% on a year-over-year basis. So 10%, pretty significant jump here, you know, on a year-over-year basis for wholesale goods and services. And however, core PPI, which exclude food and energy trade services, rose 20 basis points, and that was below the expectation of 60 basis points as well. And in Ukraine, the capital city Kyiv announced a 35-hour curfew that begins at 8 p.m. local time following Russian missile strikes that hit several residential buildings. Meanwhile, Russia is also approaching a series of deadlines to make payments on its debt. So that could also be a big catalyst for us to watch out for in Russia. And on Monday, United States official held an intense talk with China. So this was like a 7-hour call, among other things, to address concerns that Beijing may attempt to help Russia blunt global sanctions. And the discussion followed reports that Moscow requested military equipment from China for its war in Ukraine. So this is a developing story, and we'll hear about it, you know, as the days go by. And China is also going into its lockdown because of the pandemic, and the cases are kind of resurging here, and the outbreak since the height of the pandemic is once again happening in the city of Shenzhen, which obviously affected companies like Tesla and Apple, since a lot of their production happens over there. The most popular Wall Street investor survey is out, and guess what? A lot of institutional money went into cash. So just exactly when we were trying to understand the volume, and in the last couple of videos I also pointed out that this is very obvious, it's very clear where big money is moving to. It was two places, cash and commodities. You'll notice that professional investors are looking into the future and see a combination of threats adding up to the worst picture for the global economy since the financial crisis, according to the latest Bank of America Fund Manager Survey. And you'll notice that respondents reacted to the toxic cocktail of headwinds by shifting strongly to cash and moving their portfolios to the highest allocation ever for commodities. So that's where they're going. So again, commodities and cash, they're moving for safety. They don't want anything to do with tech, higher multiples, healthcare, any of those sectors. They just don't want anything to do with it right now. That's not a favorable trade. And as a result, you're seeing a big drawdown for the NASDAQ, for tech-heavy stocks, which is why, as I said, it's an opportunity for us to dollar cost average and accumulate more shares as Wall Street is not paying attention to this sector right now, which they have a short-term outlook. They want to play it by the quarter. Their main focus is capital preservation, so that's completely okay that they move to cash and commodities. Just a month ago, concerns over inflation were abating, but that changed in March as a net 62% now expect the U.S. economy to see stagflation. Stagflation is an environment where inflation's high, unemployment's high, but the GDP growth is slowed down, and a combination of higher inflation and lower growth, and that number more than doubled from February's reading of 30%. So institutions, they are expecting a stagflation type economy here moving forward. We'll take a look at Chevron here in just a minute, but let's just see. So they view the Russia-Ukraine conflict as the biggest tail risk, as 44% respondents listed the war as the biggest threat to have outsized impact, and global recession was cited 21%. Inflation was the next 18%, and some 341 panelists. So they basically combined have $1 trillion in assets under management. So this is a pretty big survey from Bank of America, right? It really gives us insight into where big money is going. And as I said, cash and commodities has been the two big sort of places where they're parking their capital right now. So Morgan Stanley reiterates Nike as overweight. Cowen reiterates Nvidia as outperform. We got Wells Fargo reiterating Microsoft as overweight. Bard also reiterating Apple as outperform. Coinbase got a buy rating. Amazon got a buy rating. We got Netflix reiteration with an overweight rating from JP Morgan. Bernstein initiates Nike as outperform. Benchmark upgrades Zoom to buy as well. Zoom, by the way, trades at a very, very low valuation. And we got Piper Sandler also reiterating Rivian as overweight as well. This is a video that I did for all of our members. So again, this is a private video that you guys can watch and have access to. My 10 big bets for the long term goes over 10 stocks that I'm basically dollar cost averaging and buying during this market sell-off, as I see a lot of potential upside over the next 5 years, 7 years, 10 years out. Every stock has a different time horizon, but again, goes over 10 of my biggest bets. If you want to get access to that, again, the link's going to be down in the description below. So again, thank you so much for joining, everyone. We do have the markets pushing higher. I'm going to quickly switch over to the actual indices since we have less than 2 minutes for the markets to open. And then we'll also take a look at some individual companies here. So PayPal up a little bit over 2%. We got AMD up over 35. Apple here just over 19 basis points. Amazon up over 67 basis points. And we have Facebook up 2% and Tesla up a little bit over 1% also. So those are the 6 stocks that we're going to focus on the day. We'll kind of switch around back and forth here. Volatility is coming back down. It was up much higher back over 33, 34 levels, and right now it is up just about 1% at the moment, trading back over 32. And this is going to be the oil prices, as crude just trading over $96 a barrel, and Brent just hovering at around $100 per barrel right now. So we've seen a pretty significant pullback down a little bit over 27, almost 30%. And Ethereum just hovering around inside this symmetrical triangle, and Bitcoin's also just consolidating sideways at 39,000. So what do you guys think? Less than 15 seconds, red or green? What are your thoughts today? I want to hear from you guys. And again, let me know in the live chat, what do you guys think about the markets today? Is it going to be a green or a red day? I would love to know from you guys. But overall, this is going to be very important for us to keep a close eye on. 318 is going to be that support. We opened at 320 right now for QQQ, and we'll see where we end up on the day today. So we did gap down a little bit. This has been the pre-market pattern. Pre-market, we've been pushing higher. So we'll see how the NASDAQ trades on the day. But 318 is going to be that support. So off we go. We're opening at 12,690 right now for the NASDAQ, up a little bit over 88 basis points. The S&P is also up 75, and the Dow Jones up over 69, 70 basis points at the moment. So yes, waiting for the rate decision that happens tomorrow. That should be very, very interesting. 25 basis points is at this point pretty much a given. I'd be surprised it'll be really shocking if they don't do any interest rate hikes, right? So 25 basis points at this point is pretty much a given. But 50 basis points, that's kind of like my preference. But I know that Jerome Powell is going to talk a little bit about the Russia-Ukraine situation and how that's put a lot of pressure on energy prices and how he doesn't want to slow down the growth. So I think 25 basis points is what they're going to do, at least to start us off, and then potentially do maybe 25, 50 basis points down the line. And also in that Bank of America survey, they collectively, all the panelists and all the hedge fund managers and general fund managers, they expect 5 rate hikes for 2022. Which is going to put us roughly at around 1.25% for the federal funds rate. So QQQ will hit 299. So yep, that is possible. So sub 290, sub 300 is possible. That is in fact our next sort of target if we continue to trade in this lower high and lower low pattern, right? So if you take a look at this overall downtrending channel, that is going to be that next target, sub 300, right? That circle you guys see, that's the lower low right here, is going to be a 298. So it's very much possible, and that's going to represent about a 6% downside, I believe, just about 7% downside from current levels if we continue to trade inside this downtrending pattern, because there's just so many headwinds for the markets right now. And of course, the sentiment is just towards extreme fear at the moment. So SPY death cross, yes. So the SPY did indeed see a death cross here. Let's just take a quick look on if we can pull up that chart for the S&P 500. So let's see. So SPX. It's going to be over here. I'm just going to pull up all the moving averages. So, all right, I don't have the 50. Let me just add the 50 here. So I'll just switch over this one to 50. So there we go. So we had the 50 cross below the 200. So that's the intersection you're seeing, Kevin. And you'll notice that, this obviously represents a death cross for pretty much any stock or index in question. And the last time we actually saw that was over here during the COVID crash, right? During the pandemic, we saw that death cross play out once again. That's going to be over here. So the white line crossing below the blue line, that's the 50 EMA crossing below the 200. And then this is known as a golden cross, where the 50 EMA is once again lapping over the 200. So this was like a bullish sort of move, and this right here obviously was a bearish cross, right, for the S&P 500. And right now we're kind of seeing a very similar to what we saw during the pandemic. So if you come back on the actual pattern right now, you'll notice once again a death cross here for the S&P 500. Now, this doesn't necessarily mean that the market's going to sell off like 20, 25, 30%. Sure, like from a technical standpoint, this is like a negative sort of technical catalyst here, but that doesn't mean anything, right? It could certainly mean that we could consolidate sideways and then push right back higher. But yes, it definitely does suggest that there could be some more potential downside. But I would again take it with a grain of salt, because in the past it's not like it's always worked out this way. The last time before the pandemic, we also saw another sort of death cross over here back in 2018, and that was during the time when U.S.-China had significant trade war, and from all-time highs we dropped a little bit over 20%, right? 20% from all-time highs is a proper bear market for the S&P 500, and right now we are down a little bit over 12.5% already, as when we're seeing this death cross. Another thing to note here is that if you come over to the monthly chart, and if I remove all the moving averages and keep only the 50. So let me see if I can bring that up. So I'll just do that, and I'm just gonna remove all of this. So let me see. All right. So yeah, if we come over to the monthly chart and just look at that 50 SMA, that's the simple moving average. You'll notice that has been a very, very strong level of support for the overall markets, right? So last 3 months have obviously been very, very brutal. It's been red ever since January, since the start of this year. This is, by the way, the 4th worst start for the S&P 500, and today is indeed the 50th trading day for the year. So 4th worst start, and the last times we saw that was back in 1935. 2000s and 2007, 2008, around those levels, and this is the 4th worst start for the S&P 500, where it's down a little bit over 12.5%. So definitely a lot of selling pressure overall in this year, but really I'm watching that 50 SMA very closely. Even for the Nasdaq, that level has acted as a very strong support in the past, except for the 2 times that we sold off pretty dramatically during the dot-com bubble and the Great Recession. That 50 SMA has acted as a very strong support. So that's going to put us roughly at 11,000, 10,500 for the Nasdaq, which does sound very scary. And for the S&P, that's going to be roughly in the 3,300s, and that's going to be a drop of just about 30% from all-time highs. That, I'm not saying it's going to get down there, is a possibility. Again, it's a probable outcome that we need to just account for in the markets at the moment, just given the state of the monthly chart historically. All right, so let's see. So, all right, Mary asks, can you give me any insight on puts on Baba, Baidu, and JD.com? Yes, so let me see if I can pull up Webull, and let's just take a look at what the options chain looks like. I haven't really pulled the trigger on Alibaba just because there's just been so much drama around Chinese stocks. So I haven't pulled the trigger yet. But again, I'm really looking at these, and they're just so tempting at the moment. And right now, Alibaba's at $76, so we're down a little bit over 1.3%. So if you come to April 14, which is going to be about a month out, for 75, you're getting $7.80. It's a 10% return on cash. $70 strike, $5.80. The thing is, the delta for these is actually still very high. That means there's still a higher probability for these to end up in the money, right? 30% chance, 25% chance, 40% chance for Alibaba to still sell off. So $4.30 is going to be for Alibaba, which is okay. I'm sure you can find better deals unless you're actually really bullish on Alibaba for the long term. And then if you take a look at Baidu, I haven't really checked out Baidu's prices, but $10 premium for $105 strike. That's about a 10% ROI. That's about an 8% right there, $8.50. Well, actually, that's going to be a little bit over 8%. And then $6.55 for $95 strike is also a very, very decent return on cash for Baidu as well. But again, 28%, 30%, that's going to be the delta for Baidu. And then finally, let's take a look at JD.com. So Tencent down by 10%. I don't think it is, because Tencent is showing you the delayed number. I think this will update. Pre-market, it shows it's down 6%. But I feel like it'll get bought up, just like all the other Chinese stocks are getting bought up right now. So you'll notice that, Alibaba only down about 2.5%. Pre-market, it was down over 6%. NIO is pretty much flat here on the day. Baidu is only down 1.5%. So I think Tencent, when it opens, this is a delayed quote. Tencent, when it does open, I think it'll get bought up just like the other Chinese stocks right now. But anyway, so let's take a look at all the individual companies here. So how is Apple doing? Up almost 45 basis points. Amazon's up. Facebook trying to stay up. AMD also trying to stay up. $100 is a big battle for AMD between the bulls and the bears. And then we got PayPal up over 2% with Tesla up close to 96 basis points. But let's just take a look at the entire watch list here. I know that Astra has a big launch at noon. So ASTR, that's a stock that I know that many folks are watching right now on the day, and how it does. It's up about 6% right now because they do have a launch. Southwest pushing higher, so a lot of these airlines going up right now as oil prices come down. It's a big cost for the companies. And Agro, this is a stock that we have discussed in the past, right? It's kind of like an agriculture stock, which could benefit from all the infrastructure loss, from all the production loss of crops in Ukraine and Russia as well. So this is a company that definitely is on the watch list. I have to get around kind of doing some analysis, but it's up over 47% right now. So all right, let's see. All right, let me just go over some of the. So Kevin, we went over the death cross here. Baba will be $16 before it gets delisted. Dan says, QQQ double bottom now. It play also. Let's take a look. So QQQ just holding off right now. 320, just up over 74 basis points at the moment. Johnny says happy face. So we just went over the Baba, Baidu, and JD.com. Tesla, Tencent we just went over. Shift is up 5.9%, so the option traders will destroy tomorrow after earnings. So Shift, okay, earnings are coming up tomorrow. So PayPal, do I think it has found a bottom? Nobody knows, right? Nobody knows for any stock if it's found a bottom or not, right? So I can't tell you, and nobody can tell you if any stock or index has found a bottom. But what I can tell you is that the valuation is incredibly cheap for the stock relative to its earnings, its free cash flows, and everything that we have talked about on the channel, right? So it's trading at its lowest possible valuation, and just based on those metrics and based on the future guidance ex eBay, which is expected to exit at 20% growth on a year-over-year basis for the company, and then their goals for driving engagement in the future with checkout and the super app. All that makes sense to me. I know it's not going to make sense to everyone. Lots of people think that PayPal is dead money and it's done for the future. Like that's it. It's the company's done. I disagree. Again, everyone's entitled to their own opinion. I'm not here to convince you of anything. But just because I see value in PayPal doesn't necessarily mean that other people will see value as well. There's like thousands of stocks, right? There's like over 8,000 stocks in the market. So obviously we're not going to agree on the same things. And that's what makes the market. But for PayPal, I still see value. I still think they have a strong potential to continue to grow their revenues and earnings and free cash flows. They've got a nice 4 to 5 year time horizon of growing their revenues, getting them up to 50 billion, free cash flows, getting them up to 10 billion. And just based on those numbers, I do believe that PayPal right now is currently undervalued and very, very oversold as well from a technical standpoint. So That's just kind of like my thoughts there. And then AMD, God, I really need this under $100. Sub 90 would be lovely for advanced micro devices. So long candles coming in for AMD. Yep, so probably on the downside here, AMD right now. So just turned red. Let's take a look at NVIDIA. How was NVIDIA doing? So NVIDIA also flat here, but selling off here intraday, and so is Tesla. And yeah, again, there we go. Lots of stocks starting to sell off here intraday. That's why it's so important for the markets to close strong rather than just open strong. I hate gap ups. I don't like gap ups at all. I prefer gap downs and then that intraday sort of momentum, because with gap ups here, we see the gap coming, getting filled towards the downside, and then a lot of selling pressure intraday as well. But AMD, this is going to be the complete, technical breakdown. $99 is where there's going to be a big battle for AMD. Last time we got down to those levels was $100.08. Bulls held up very nicely twice. And the time before that, we got down to $99.35 before getting bought up to 105. So twice, bulls have done a good job kind of validating that support before pushing higher. But I do think with the lower highs forming, would not be surprised one bit if we break down below $99 for AMD. And that would be the time for me to kind of sell some cash secured puts on that stock to kind of acquire more. All right, so Roku, let's take a look. Tesla needs to announce another Hertz deal or something. So Roku here coming down to $98, right? $98.75. So that is a first support level that we're watching for the company, all the way down to $77. So this right here is going to be that next support level to watch for Roku. And unfortunately, it has traded at a higher valuation. I've done a complete analysis on Roku as well, so make sure that you do check that out. Strong revenue growth without a doubt, but I think their operating expenses are equally higher. And there's some other sort of things to look out for. I think the share dilution might have been an issue for the company. Yep. So coming in from about 95 million shares to well over 130 million shares right now outstanding. So that's about a 40%, 30% dilution over the last 6-7 years. So definitely check out that video to get my full deep dive analysis on Roku and what I think about the company overall. But technically next support $98. Right now we're just hovering around that level all the way down to $77 for this company. So we got the NASDAQ here selling off. We got the S&P selling right back down, and we got the Dow Jones also selling off a little bit here on the first 5 minutes. Well, actually, just in the first 15 minutes. All right. So, what kind of questions? What kind of stocks you want me to go over? The chat has been quite quiet, rather quiet here today. So, let me know if there's any stocks you want me to go over. If you have any questions, the market definitely has been very, very sort of brutal to say the least, right? So, we've just seen red after red after red. So, overall, this has been the pattern. How many guys actually see a breakdown below 318? I want to hear from you guys. You know what? Let's just do like a poll. Is the QQQ going to break below 318? All right, so let me know what you guys think. Okay, so it's a simple yes and no question. 318 is that support. We have validated that level twice, not once, twice. That was a level coming in from March 14th. Low was 317.45, and the day before, not actually the day before that, on February 24th, we got down to 318.26. So both times we validated that support, right? So once over here, and then another time over here, and right now we're just holding up 318 right now. So how many guys actually think that we're going to see break down below 318, possibly come down to that lower low? So TM says, just taking it all in, depressed. Come on, man. You got a great community around you. We're all here to support each other. Obviously, the markets are, the way they are. They can't keep going higher. You'll experience days like, yesterday and days like the day before, or even weeks and months where the markets just don't do anything and continue to sell off, right? It's just like a slow and steady bleed. I mean, think about how much the selling was back in 2018, right? So if you come back to that time frame, this is the March 2020 crash. This right here from October till December, right? So it was like good 3 months where the markets just kept going down. Even before that, so if you come August 18th right? So August 18th is when we were hitting that all-time high for the Nasdaq at over 8,000 since December, right? So we're talking like a good 4 or 5 months where the markets just kept going down, just kept making lower highs, lower lows, just kept selling off. And these things, don't always happen. Like, look at this, right? From July 2015 till February 2016. So that's almost 8 months, 9 months where the market just traded sideways, right? Just went down, sideways, all over the place, didn't quite give us a direction. Eventually we started to find a bottom and then started recovering back higher, made new all-time highs and kept pushing higher. So, you will find months, sometimes weeks, months, quarters, years even, where the markets don't do anything and just trade sideways. This is 2011, right? So February 2011 till December 2011. So almost an entire year, right? So if anything, 2022 could be like this, right? Where we just go sideways, where the Nasdaq, goes up, comes back down, goes up, comes back down. So it's just like back and forth, sells off, comes back down, back and forth, and then starts to really see that rally push higher and then starts to make some all-time highs. But the point is that you will see like times where the markets just don't do anything. It's just like, sideways or going down for some time, and that's okay. That's okay. Yeah, you'd rather, the thing is that if the markets just trade sideways or down for the next year, that's good, because that gives you a longer opportunity to accumulate and dollar cost average while the markets are down, right? Sometimes what happens is markets just come down and recover so fast. What happened in March 2020, by the time you get your full position built in, the market's already 20, 25, 30% higher, right? So if we see a very, very fast recovery back higher, that's not going to give us plenty of opportunities to dollar cost average. Sure, it's going to give us some, but it's good. The markets keep going down or even sideways, giving us the opportunity to accumulate dollar cost average before it starts pushing back up. All right, so 76% of people expect the QQQ to break down below 318 right now. So, we are selling off intraday. It's only up 40 basis points. So we're seeing a green day but a red candle. So that does represent a lot of intraday weakness. But it's clear the sentiment is very bearish. So 76% and 25% expect the markets for the QQQ to bottom out 318 here. So, all right, let's take a look at Coinbase. So let's just take a look at Coin. Wow, 150 down close to 2%. So this is all coming off of Bitcoin down over 2.82%. So Mara is down over 4.6. So overall, BTC I've mentioned a very, very sketch pattern. So I'm not confident at all for Bitcoin to hold this $37,000, $38,000 levels. So again, I'm gonna say it again. It may not happen, but my gut tells me that we're probably going to see a breakdown below 37,000, 38,000. Just looking at the weakness here of these lower highs, and would not be surprised one bit if we come down to 30K. This is going to be that next support for Bitcoin. So yeah, that is a possibility, and I would not doubt that one bit if Bitcoin starts to break down. So Upstart, let's take a look. Upstart probably is selling off here quite a bit. Not too bad. So down just about 2%. So just over $80 per share. In the last couple of days, it's sold off so much. So definitely breaking down from this bear flag. So selling pressure, consolidation, a little bit of a bear flag, and now a big breakdown even further from those levels, right? So you can see it on the weekly chart even better of how we were selling off, consolidation, and then a big breakdown here for Upstart. So, all right, let's take a look. So yeah, so the stocks that we went over earlier, Southwest, Astrospace, they're still pushing up. Foot Locker's up, Snapchat pushing up, Vertex back up to 245. So starting to see a nice breakout back to 42. So very, very nice move back to the upside for Vertex Pharmaceutical. So next target, next resistance should be 250. That's the level that we got rejected at, 254, 255, actually around those levels right here. 254 would be the level to watch for Vertex. All right, so when Fed announced interest rate decisions, so that's going to be tomorrow. Tomorrow is when they announce the interest rate decision, the summary of economic projections, all those things that we're looking forward to. It's going to be announced tomorrow, and I think the time is a little bit different. So what I have on my calendar is not actually correct because we had the daylight savings. So I think it's going to be 2:30 p.m. Eastern is when the conference actually takes place for the Fed. So, all right, let's take a look at how's InMode doing. So InMode down a little bit over 1.75. So watching $31 next for this company, right? So we had both the shares and a CSP on this. We've closed out the cash secured put before earnings. Fortunately, we did that before earnings, because after earnings, even though they reported some very strong numbers, they ended up dropping. And then I personally only have a very small position right now in InMode, which I plan on dollar cost averaging. The more it comes down, the better the valuation becomes, the better the pricing becomes for this company. Very, very strong growth, very strong margins. The margins are incredible for InMode, because they are a company based out of Israel. So their cost of production for all these products and hardware and everything that they offer is really, really low. As a result, very, very thick margins for the company, right? So well over 46, 45% profit margin, but the gross margins are even more ridiculous at over 80%. And they've guided for some decent numbers moving forward. So, all right, so let's take a look. So support for NEO, unfortunately, is going to be at $10 right now, $10.50. That's the level to watch. Next, so down a little bit over 6%. All Chinese stocks have just become uninvestable at the moment, unfortunately. Take a look at Alibaba. Same exact pattern, right? Almost identical pattern for Alibaba as it is for NEO, right? Lower highs and lower lows, and then just selling off, big sell-off here over the last couple of days. And Alibaba also at $74. Same pattern for, if you come over to Tencent, down over 4.7%. Same exact pattern, selling right back down. And then JD.com slightly higher today, but also exact same pattern of lower highs and lower lows, and now starting to break down below $50 per share. So Evelyn, Caddy, if you see a 25 basis point interest rate hike, do you see that will affect Google and Amazon? Not that much. 25 basis points is still very stimulative in general. I don't think it's going to do much for the cost of borrowing for a lot of these companies. But if you really think about it, these companies like Google, Amazon, and Apple, and all these big tech companies, even Tesla to some extent, they've got plenty of free cash flows coming in. They've got plenty of cash on the balance sheet, plus they've got plenty of free cash flows generated every single year. So even if they do reduce that cost of borrowing a little bit because interest rates are going higher, they are still going to be well off, right? So they're still going to be well off just from a cost of borrowing standpoint. Now, in terms of multiples and valuations, sure, that's going to be priced a little bit lower because, again, when interest rates go higher, their future cash flows worth in the present value drops, which as a result drops their valuation in general. So that might still be in effect. But even 25 basis points, I don't think that's going to do much to change that. That's why 25 basis points right now from the Fed is still very stimulative. When we get past 1% for the Fed funds rate, that's when it starts to become a little bit more of a tightening for the U.S. economy. So Lulu, let's take a look. Lululemon, watching 272 here very closely on Lululemon. So that's a support that it's validated coming in from March 21, even before somewhat previous resistance before the pandemic. Let's take a look at if we can pull up Seeking Alpha here and see what the valuation is for Lululemon. So, all right, let's take a look. Valuation. So right now we are trading at 37 times forward earnings, which is high. Price of sales is trading at a little bit under 6. Just under 6, enterprise value to EBITDA 23, and we got price of free cash flow at just about 32. So valuation still is high for the company, unfortunately, at the moment. Growth is still expected to be decent, 22% growth expected for revenue, EBITDA 21%, earnings 22%. So not bad at all, right? So financials, if you take a look at the actual revenue and earnings and everything else for the company, decent growth coming in from 2.3 billion, 2.6, 3.2, 3.9, and well over 4.4 billion. And if you take a look at the EPS, $4.50, right? So 450 times 1.22, we're looking at 550 as the actual PE, actual earnings per share for the company. And since it's trading at 282, it's trading at about 51 times on a forward basis, accounting for that 22% growth at the moment. So I don't know why it's saying 32 as a forward PE. So PE is a little bit high, definitely, but I do like the brand, and the revenue and the earnings growth has been very strong. And they've actually been buying back their shares, which is great, which is very, very good for the company. So I'm watching about 272 right now as the next support. Yes, Ranjit, I do have TD Ameritrade. I also have Fidelity. I have Webull, and I've got a couple other brokerages here in India as well. All right, let's take a look. So volatility here, VIX coming down. So on the day, it's still up over 41 basis points, but just over 31 at the moment. And QQQ is getting bought up, right back up. So Nasdaq is up close to 1%. We got S&P up over 72 basis points. Dow Jones up over 227 points also. This pattern, by the way, broke down below that support of 77, right? So 0.77 was that level. So we have definitely come down. The RSI extremely oversold. So this has seen a big exodus from Nasdaq related stocks. Which is why I'm just able to accumulate in dollar cost average, because there's just so much oversold levels and valuations coming down and extreme fear in the markets for this particular sector, right, which is Nasdaq heavy, tech heavy stocks right now. They're just not performing at the moment. So this was a relative chart, so SPY clearly outperforming over the last several months, and this chart now starting to break down below 0.77 as well. Okay, so use their valuation instead of seeking alpha. Okay. So thanks. That's a great tip. I'll definitely take a look at that. And interactive brokers, yes, I've heard they've also got a very nice interface as well. All right. So which stocks are individually pushing up? Wow, look at Nvidia up over 2%. We got AMD up over 1.7. Apple is up 0.5%, Amazon 1.6. We got Facebook flat here on the day. Tesla's flat, not really doing much. And then PayPal is also flat. Well, actually just up over 2%, but intraday not really making any moves at the moment. So, yeah, I mean, markets have a long way to go. So, every green day, it's like we need 10 of those, because overall, it's just been slow and steady, painful. Like, how many of you guys now don't even feel the pain anymore? It's like every day has just been so red that I've just gotten numb to the actual redness of the markets. It's just been, I know going in that it's going to be like a red day, right? So it's been crazy. It's been crazy from an emotional standpoint. Yeah, so Alfred says numb. Been like that, not getting hopes high. Yeah, that's how it's been. Like, that's why, in our yesterday's market psychology video, I do think that we're getting into a point where, we're seeing some capitulation. People seem to be giving up, on their stocks and just selling out and just exiting altogether. And then at the same time, we've got some sort of confusion in the markets, a little bit of anger, a little bit of sort of denial as well, and some disbelief too, right? Disbelief as in any type of green day. It's like, it's just a fake rally. It's just a bull trap. The markets are gonna come right back down, and that's been working out very well. That's exactly what's happened. Every time you've seen a strong green day, seen a rally of 9% here, rally of close to 10% here, small rally of 6% here. Every single time we've come right back down to make lower lows. So I think it's fair to say that this time is no different. And if we until we see a breakout past 350. This resistance, I'm not going to be convinced one bit that this is any type of a bull rally. Everything else up until that point is going to be just like a bull trap, so to speak, for the markets. So so Michael says, since November, wow, I'm down $1 million plus in unrealized gains, so that's unfortunate. I'm sorry to hear that. I wish you recover all that and more. So yeah, I mean, that's the thing. So Steve says, Neo, will you continue to hold? Yeah, so again, I actually talked about all of that in this video. So, make sure that you do check this out. It goes over my 10 big bets for the long term, again, 5 to 7 years out. 10 plus a few more like smaller ones. So again, this is a video that I did for all of our members. It's access to you, available. Very, very simple. The company, the ticker, and the sector that it belongs to, and why I'm buying it, right? So that's kind of like going over 10 stocks that I have my highest conviction pretty much for the next 5 to 7 years, in a nutshell. right? These 10 companies that you will see pretty much makes up over 85 to, I want to say, like almost 90% of what I own at the moment. So very, very insightful video, kind of going over a lot of things. All right, let's take a look at Enphase, ENPH. So let's see how this stock is doing. So just been consolidating sideways, right? So it's just been, more or less a lot of consolidation pattern for Enphase from about November 2020. It's just been sideways here. I do like Enphase in the electric energy sector. In fact, they actually have an office here in my city. In the earnings call, they also mentioned that their office over here, they're expanding that over here in Noida, the city of Noida. So that's very interesting, but very, very strong revenue growth, strong earnings growth for the company as well. They are raising their prices for their micro inverters in 2022 because of all the inflation pressures they're getting. The only problem I have with Enphase at the moment is the valuation. The multiple is incredibly high. Enphase, we have traded this before. I've had a position in this before, but right now, once again, I'm looking in the hundreds, sub $100 levels for this company, right? So this is going to be that next support to watch really for Enphase, and resistance is actually going to be over here, roughly in the 227 for Enphase. So, Steve, you're welcome. You're welcome. I really appreciate that you enjoy the videos and content, everything. So glad to hear that. And yeah, I you know what, I get it. Like, this is a market which is very tough, and oftentimes we kind of become short-sighted, right? I myself have been in that situation where the market can seem like it's not investable anymore, but we always got to recalibrate and tell ourselves long-term quality companies will win out. They always have, and they will win out. Eventually, it's the fundamentals that matters most, right? These geopolitical tensions, yes, it's a very unfortunate thing happening in Ukraine and just globally in the world right now, but just look at the companies that you own, right? And look at what their future looks like. And if you believe in the quality of the company, if the management's strong, if the balance sheet's good, if everything is working out, if everything the company is doing is moving in the right direction, the only thing that's changed is the price. That is, in my opinion, not the reason to be actually selling, but instead the reason to be buying, right? If the whole market as waves comes down and stock prices come down, but the fundamentals keep pushing higher, keep doing well, that is not the reason to be getting out, but instead quite the opposite, right? And that's kind of like our goal to do. Like, when there's a sale in the stock market, nobody lines up, right? It's this, when we have a sale at the supermarket, everybody wants those discounts, but when there's a sale for these prices, for these quality assets, nobody wants to do anything with them. And that was a point from yesterday's video too. There's somebody out there that paid over $400 for Zoom, right? And now when Zoom's under $100, nobody wants to touch it. There was somebody out there that paid over $70 for DraftKings, and now when the stock's sub $20, nobody wants anything to do with it, right? That's how psychology plays, in the markets, which is very, very interesting. So, Ranjit, thank you so much. I appreciate that, and hanging strong during panicking times to guide the community. I appreciate that as well. And yeah, long term, I see us all, doing incredibly well, because this is just like a small blip. And today I was also looking at the engaging data. So actually, I have this open. So I was looking at this chart, and again, I've shared this before with the community. This goes back to 1950s. It shows us all of the S&P 500. So right now we're looking at the S&P 500 index since 1950s, and how many times we've been down a certain level, right? So this should not be new information to you guys, because I have gone over this in the past. So, all right, let me just refresh this, see if I can do this again. So, all right, so over here, you'll notice if I uncheck these things, right now it shows us how many times the S&P 500 has been within 20% from its all-time highs or more, right? If I uncheck the 20% even further, only 17% of the times, right? So last 80 years, actually 75 years, so since 1950s to now, 72 years, 73 years, only 17% of the times the S&P 500 has been down more than 20% from all-time highs. Within 20% has been 19% of the times, and right now we are in that boat. So if you kind of zoom in over here, you'll notice that we are, in fact, down over 12%, over 13% from our all-time highs, and we are in that once again. In the last So 2022, 2015, so in the last 7 years, we've seen that happen 5 times. 5 times, actually more than 5 times. So once in 2015 that I just went over, again in 2016, once again in 2018, very, very briefly. So you'll notice that we were down a little bit over 7%, 9%, still within 10% of all-time highs. And this right here was 2018. This right here was the pandemic, and once again right now. So in the last 7 years, we've seen this happen 1, 2, 3, 4, 5, 6. I'm going to call it 5 times because this 2018 doesn't really count. It's like a very, very small blip. 5 times, right, over the last 7 years. So that's why I mentioned in our yesterday's video that these don't happen very often, right? When you see a market like this, where the S&P is in a correction, the NASDAQ is in a bear market, the Dow is in a correction, you don't see these markets very often. It happens like once every 2 years, maybe once every year and a half. And when that happens, we have to take advantage of that, right? You gotta be taking advantage of that volatility and of that pullback here. So, and that's that. And then of course, 10%, 15%, 1%. It's just consistent uptrend here for the markets overall. All right, so how are the markets doing here? NASDAQ's up a little bit over 1%. We've got the S&P up over 71 and the Dow Jones slightly pushing up over 45, 46 basis points. So far, QQQ is holding up 318. Not bad. Back over 322 right now. Costco, so 1.37%, pushing higher very nicely. Seems to be forming a nice sort of higher highs and higher lows. So very, very nice uptrend here overall. At the moment, just consistently pushing up. That's good. It is trading at a very high multiple. Believe it or not, Costco right now trades at a higher multiple than Google, Amazon, and Facebook. Costco trades at 42, 45 times earnings right now, and 23 times cash flow. So yeah, this stock definitely trades at a rich multiple at the moment. Yeah, Tom, I heard that. Someone bought Tom Brady's football for $518,000. It could be worse. That is crazy. That is definitely crazy. And I don't know how many guys actually do watch football, like actual, European football, like soccer. But Tom Brady also met with my favorite team, which is United, and even CR7. So that was pretty cool. And maybe he was the one that talked him out of retirement. So now he's coming back to play for the Bucks once again for another season. And that's also created so much buzz for American football once again. So gold up, then down, and wheel goes round and round. So let's take a look at some commodities too. So gold down a little bit over 1.7%. So it got up to as high as 2,067. Wow. Yeah, pretty big rally here. Right now it's coming down over 7.37%. Yes, so you're right about CR7. Yep, greatest of all time. Absolutely, no doubt about that at all. Shito says, "Come on, Madrid." Oh man, come on. United's got a big game today, so I'm confident they're gonna get through. Silver down a little bit over 1.2% here. So it got up to as 26.27. And then wheat up a little bit over 2.8%. Wheat's also come down drastically from 1,500. Wheat is like the lumber of 2022. That's what it feels like. Lumber prices had a big rally in 2021, and wheat here is it has pushed higher quite a bit from February 2022. It's rallied over 83%. So big jump here, and right now starting to come back down. Getting a lot of comments on VXX. So wow, up 44% here for volatility. So definitely very, very strong move for VIX short-term futures. So that's a lot of volatility here. So Barclays said Monday it has suspended the sale of issuance of 2 exchange-traded notes, which combined assets of $1 billion, one linked with crude oil, another gauge of market volatility due to the capacity constraints. Some 71 million VXS shares changed hands daily over the last month, about double the average daily volume over the past year, as investors place bets on the stock market volatility as Russia-Ukraine crisis roiled global financial markets. So the move could be prompted by the lack of liquidity in the market. So I feel like there's just going to be more buy orders right now than there's available shares. So definitely big move here in VXX. Yenser says, oh my God, we don't even have to have that debate anymore. It's just like, it's night and day, my friend. It's night and day. It's like there's no comparison anymore. All right, so a lot of you guys are asking for an Astra update. Let's see, so it's up close to 4% right now. I do know that they have a launch coming up at 12 right now, I think like at noon. So I think that's when it'll be most volatility here for Astra. So about a couple hours. Not going to be live till that time, but I'm sure you can live stream it, and I'm sure you can watch it somewhere. You know how their actual space flight goes. So Monday, it has agreed to offer its space launch services to spaceflight through 2025 under a new partnership. If the company can report some good numbers, I'm happy to do some analysis on this. But unfortunately, we don't have anything, right? I mean, we don't have any revenues. We've got so much, you know, just shows net income negative. It's trading at 2 times book value, but none of the other multiples are available. And just look at the sheer dilution over the last couple quarters. It went from 37 million to over 254 million. Jeez, it's a lot. All right, so wow, Amazon doing much better. Facebook's just struggling right now. We got AMD, PayPal, Tesla, you know, Nvidia, all right now pushing higher at the moment. So Nasdaq still doing okay, just up over 87 basis points. But again, that's gonna be it for me, you guys. I really appreciate it. Couldn't even buy wheat on Fidelity for days. Really, there might have been some liquidity issues there too, because wheat was also significantly in demand the way it moved up so quickly. But anyway, so thank you so much, you guys, for joining. I really appreciate it, and make sure that you do drop a like and subscribe. If you are new to the channel, we talk a lot about fundamental analysis, technicals, macroeconomics, all that is covered. And make sure that you do check out the Patreon link down in the description below if you want to join our Discord, and of course get access to all the private videos that I do for all of our members, you know, going over updates, you know, buy and sell alerts, options alerts, and all of their downloadable stuff as well. So a lot of research files, PDFs, Excel files, all that stuff is available to download as well. So hope you guys have a great green day. On the Qs, I'm watching 318 as a support right now, at least for the next couple days. And then for the SPY, we're going to be watching 410. Right now, we're like just consolidating sideways. So 410 support, 427 is going to be that resistance to watch for the SPY. And don't forget, tomorrow, we've got the big FOMC meeting where Jerome Powell is going to be talking and addressing the entire world with the interest rate decision. So thank you so much for joining. I really appreciate it. Hope you guys have a great green day, and I'll see you guys first thing tomorrow morning for another Market Open live stream. Take care.